Now in this, there's an area called theory of price or profit maximization model. Ideally, if a question comes, it can come even for 10 marks from here. A profit maximization model. Let me first explain this. But technically this approach is not the right approach, but let me first explain what is profit maximization. Price unit sold, variable cost per unit, contribution per unit, total contribution. Let's take the price to be 500. In 500, I am selling today 5,000 units. In 500, today I am selling 5,000 units. If I increase this to 550, if I increase this to 550, which is 50 rupees increase, demand will go down to 4,000. Demand will go down to 4,000. If you increase this further to 600, that is another 50. Demand will become 3,000. Demand will become 3,000. If you make it 650, demand will become 2,000. If you make it 700, demand will become 1,000. If you make it 750, demand will become 0. Any doubts on this? Like this, I can do 450. I can do 450. Price going down. This will become what? 6,000. 400, 7,000. 350, 8,000. 300, 250, 200, 11,000. 150, 12,000. 100, 13,000. 50, technically 0 may not come, but okay, let's do till 50. Now what is profit maximization? This question will give you 2-3 data points and tell you what is the optimum price. What is the optimum price? What is optimum price? The one which gives you maximum profit. Let's understand variable cost given in the question is 250. Variable cost given in the question is 250 per unit. In Excel, I can do detailed calculation. I'm making negative contribution. I'm making negative contribution and positive contribution, and this is my total contribution. Which number is giving maximum profit? This is my optimum price. This is my optimum price. Not exactly this. There can be even slightly less or slightly more, but this is the concept. The concept is finding out what is the optimum price to make money. What is the optimum price to make money? How do I do this calculation? You cannot be writing 20 items like this in your notebook, or in, if you have an Excel, it's okay, but otherwise this is not possible. Let me go back to only 2 data. Let me go back to, yeah, demand curve is linear. This is called demand curve is linear demand, where the demand will keep changing, but practically it can't be linear. 500 becoming 450, 450 becoming 400 is a different change. So practically this approach is not acceptable, because exactly you cannot do this. But okay, let's assume they give you 2 data. First is price is equal to A minus BQ. Price is equal to A minus BQ. Now what is price is equal to A minus BQ is, price, you know, A refers to the price at which you can sell 0 units. A refers to the price at which you can sell what? 0 units. In the Excel, I have done 0 unit also. I'll show it later. I'll show that later. But as of now, how to get it through formula? B measures the relationship between price and quantity change. Relationship between price and quantity change. It is delta price, delta quantity, multiply with quantity, multiply with quantity. So what does the equation says is, price is equal to maximum price. What is maximum price? Price at which you will sell 0 units minus the delta in price, minus the delta in price. The formula is price is equal to maximum price minus what? Delta in price. For example, P is equal to, or 500 is equal to, 500 is equal to A minus delta in prices 50, delta in prices 50, delta in quantities 1000, into Q is 5000 as of now, into Q is 5000. What is 5000? 500, 5000, 500 and 5000. Can you solve this and tell me what will be A? 500 is equal to A minus 50 by 1000 into 5000. Not 250. A is equal to 750 is the price at which you can sell 0 units. 750 is the price at which you can sell 0 units. I'll explain again. Price is equal to what? A minus BQ. With this, I'll not get an answer. I'll keep doing the calculation. This is the first part. This is the first segment of the calculation. A minus BQ. 500 is equal to A minus what? 50 by 5000 into Q. What is 50 by 1000? Change in price by change in quantity. Quantity denominator, quantity numerator is cancelled. Price is equal to maximum price minus change in price. Clear? Now, then they say MR. The term MR means marginal revenue. The term MR is marginal revenue of one extra unit. Mathematically, it will be A minus 2BQ. A minus 2BQ. We did 500, 5000. If you do 501 and check what is the, sorry, 5001 units, 5001 unit, what is the price, and get the incremental revenue, it will be MR, incremental revenue. A minus 2BQ. MR is equal to 750. 750 minus 2 into 50 by 1000 Q. Clear? To cut it simple, 750 minus 0.1 Q. 750 minus 0.1 Q. Concept says equate MR equal to MC. Marginal revenue is equal to marginal cost. Equate marginal revenue with marginal cost. What is marginal revenue? Additional revenue from one unit. What is marginal cost? Additional cost of one unit. If both are equal, it means you cannot earn more profits beyond this. It means you cannot earn extra profits. Till that level, you will keep earning extra profit. Till that level, MR means additional revenue. 0.2 Q. Is it 0.2 Q? 0.1 only, no friend. 2 into 50. 50 by 1000 is 0.05 into 2. I think 0.1 only. Just check it if I have done it. 0.1, 2 BQ, multiply 2 BQ. So 0.1 Q. Any doubts on this? I equate this now. 750 minus 0.1 Q is equal to marginal cost, which in this case was 250. Can you solve this and tell me what is Q? What is Q? That is my optimum output, and that is what the table told. The table told me the optimum output as 5000 units. The table told me optimum output as 5000 units. I don't want you to do the entire table again because it's not possible. So what we do? First we calculate marginal revenue, we calculate marginal cost, equate them. I'll explain this again. So what we do here is, first is you find an equation for price, which is A minus BQ. Price, any price level will be given in the question. Take that, calculate A. Calculate A. What is A? Maximum price with 0 sales. Maximum price with 0 sales. What is B? Change in price by change in quantity multiplied with Q. Q and Q got cancelled. You will get the equation. Once you get A and B, substitute in A minus 2BQ. Substitute A, substitute B. Equate this to what? Equate this to your marginal cost. Get the quantity. Now what you will do? price is equal to 750 minus 0.05 Q. Substitute the Q here. Substitute the Q here and get the price. Here it was 5,000, but some other question you may get 10,000 as the answer, which you don't know the price. So substitute again in the price equation. Substitute again in the price equation. Clear? Any doubts on this? Only challenge with this model is assuming linear relationship. Assuming the linear relationship, which I don't agree to. I don't agree to a linear relationship. That is a big disadvantage of this method. That's a big disadvantage of this method. I'll see a problem in some time, but this is the concept. The concept is very simple. A refers to the level at which you sell 0 units. B refers to change in price by change in quantity. Denominator, numerator cancelled. You get the equation. You get A, B, substitute in MR, A, 2B equal to MC, get Q, substitute back in price, get the price. Substitute back in price and get the price. So theory of price, objective should be to what? Maximize profit. Objective is to find a level at which marginal revenue is equal to marginal cost. Price is equal to A minus BQ. Marginal revenue is equal to A minus 2BQ. P is price. A is price at which demand is 0. Q is equal to quantity demanded. B is slope of demand curve. That's a economic name or the technical name, slope of demand curve, change in price by change in quantity. Any doubts on this? Let's take this example. Aditya Heavy Engineering Limited produces its only product A7. To manufacture A7, variable cost is 2,20,000. Market research has indicated at a selling price of 5,10,000, no order will be received, but demand will be increased by 2 units for every 5,000 reduction in selling price below 5,10,000. Identify the optimum volume and selling price. Identify the optimum volume and selling price. Now in this question, what does this 5,10,000 mean? What does this 5 lakh? No, that is the maximum price. No, market research has indicated that at a selling price of 5,10,000, 0 will be the sales. 0 will be the sales. So A is given in the question. B is also given in the question. B is also given in the question. What is the formula for B? Change in price by change in quantity. So A is given, B is given. I'll directly form a price equation, MR equation, MC equation, equate, get the Q, substitute in P, get the optimum price. Let's start doing this. Price equal to A minus BQ. A minus BQ. Price equal to what is A in the question? Minus change in price by change in quantity. Change in price, quantity in the denominator, quantity in the numerator will get cancelled. That's the logic. What's the change in price given in the question? 5,000, and demand will change by how much? Simplified version, 5,10,000, 2,500 Q. 5,10,000, 2,500 Q. Any doubts on this? Then MR equal to A minus 2BQ. Whatever is the price, just multiply with 2. MR equal to 5,10,000, 5,000 Q. Ideally, the question can come from here. If it gets tested, it will be a fairly simple thing to do. 510 minus 5,000 Q. Marginal revenue equal to marginal cost. 5,10,000 minus 5,000 Q. What is the marginal cost? 2 lakh. Get answer to Q. Get answer to Q. Optimum volume. Optimum volume is 58 units. Optimum volume is 58 units. Any doubts on the optimum volume? Any, sorry? Variable cost given in the question, no? 2,20,000. Variable cost of 2,20,000. Marginal cost is variable cost. Any doubts? Can you proceed? I substitute this back in the price equation. Price equal to 5,10,000 minus 2,500 Q. 2,500 into 58. 2,500 into 58. 3 lakh. Optimum price. Optimum price. Volume 58. Price 365. Volume 58. Price 365. Any doubts? And I add one more requirement. Optimum profit. Units into selling price minus variable cost, or units into technically contribution per unit, minus fixed cost. There's no fixed cost and all. Optimum profit. This is the maximum profit you can make. Units into contribution per unit minus fixed cost. Units into contribution per unit minus fixed cost. Maximum profit which can be made. Any doubts on this? How many units we are selling? At what price? What is your cost price? Minus 0 fixed cost. Tell me the final number. 84 lakh. This is the maximum profit potential of this product. Maximum profit potential is 8410. If you fix any other price, you will get only a lesser profit. Any price you can take, because price will change the volume. Volume changes, profit will go down. Volume changes, profit will go down. Any volume you can check. Any volume you can check. If I do 60 units, price would have been 5,000 lesser, 3,60,000. So if you do 60 into 1,40,000, I make a profit of 84 lakh. I make a profit of 84 lakh. And if I increase the price, it will go down to 56 units. 56 into 1,50,000, again 84 lakh. Price reducing, price increasing, both will reduce my profit. Both will reduce my profit. Any doubts on this? Clear? Till 56 you will keep making more money. Beyond 56 you cannot make money. Till 56 you will keep making money. Beyond 56, see, this is what I said, no. This is that example. 50, 100, 150, 200, 250. So beyond 500, when you increase price, profit is going down. Profit is going down. And before also profit is going down. So from 500, whether you raise price or increase price, profit will go down. Any doubts on this? This is your workings. That is, you can try any level. You can try any level. I'm not doing any calculation. But if you want to do 60 units, check the price. When you check the price and apply the formula, your profit will go down. Or check 56 units, which means price will go up. Check again, you will see a reduction. You will see a reduction. Any doubts on this? Can you please try doing this? I'll discuss it in some time. You try to form the equation. Form the equation. Try. I'll take you through in some time if you're not able to do it. A is not given. You will have to first calculate A. Try doing it. Any I'll discuss. Try forming an equation. Okay, I'll start getting into explanation, or take I'll wait for a minute. First, you'll have to calculate A here. Can we start discussing? Live online guys, if you need time, let me know, else I start discussing this. Okay, take your time. Okay, let me start discussing now. First is price is equal to A minus BQ. In that I know price is 25, volume is 10,000. So I use that 25 is equal to A minus change in price by change in quantity into 10,000. I get A as 35. I get A as 35. Then price is equal to 35 minus 0.5 by 500 into Q. 0.5 by 500 into Q. Marginal revenues 0.5 by 500 into 2 which becomes Q by 500, which becomes Q by 500. 35 minus what? Q by 500. I equate this to marginal cost, which is given in the question. How much? 17. When I equate this, I get Q as 9,000. I substitute back 9,000 in the price equation. I get price as 26. Any doubts on this? Fairly simple, straightforward question. Any doubts on this? Please get me answer to this. Quick. This should not take you more than a minute. Start doing it. What's the answer? 3 units. And if I have to go and calculate price, it will be some 65,000. 3 units is the answer. Any doubts on this? Any doubts on the concept? Clear? Compute the optimum selling price, 65,000, that I've already discussed. Any doubts on this?